Hey, it's Cliff, and let's be honest, guys, you do not have a lot of free time, so you cannot spend day after day tracking the crypto news. So I'm going to provide you a service where I look at everything that happened in crypto this week, try to run through it really quickly in 20 minutes or less, and let you know everything that's going on so you can get back to enjoying your free time off. So let's go ahead and get into what I have. So first major news that I saw this week was that David Schwartz, who is our CTO of Ripple, changed his wallpaper on Twitter. And it states, when a scrappy financial startup takes on a web of corruption and betrayal to bring instant payments to the masses, they learn that the cost of disrupting the status quo is higher than they could ever have imagined, forcing them to decide between their vision and their survival. Now, a lot of people were looking at this wallpaper change, and people were trying to say, does this mean that they are kind of giving up and they're moving overseas? They're kind of giving up on, the United States after dealing with this SEC case. Is David just kind of trolling again? He has definitely trolled in the past. He obviously doesn't really comment on what this actually means. There could be NDAs or just things that they don't want to reveal in the court case. So honestly, no one knows what this means, but it's always interesting when he puts up something like this. It makes people kind of think, and to me, I honestly think he's just trolling. He likes to get a reaction from people, and I've seen him do this several times in the past. Moving on, Fed increases focus on crypto, alerts banks to liquidity risk. Unrelenting interest in the crypto prompts a new warning from the Federal Reserve and other agencies. So this article states that continuing its increased scrutiny of the cryptocurrency industry, the U.S. Federal Reserve released a new statement on Thursday reminding banks of the risks inherent in dealing with cryptocurrency. Certain sources of funding from crypto asset-related entities may pose heightened liquidity risk to banking organizations due to the unpredictability of the scale and timing of deposit inflows and outflows. So this was just another big government, hey, crypto is bad, fiat good, you need to keep your money on fiat, do not mess with the cryptocurrency. I believe they pointed to several things that actually did happen last year, like Terra USD collapsing and several things going on with FTX and Celsius and everything going on. So it seems like the Fed is continuing to promote the image that crypto is bad, fiat is good. Moving on from there. So this one I thought was actually really interesting. It says Spotify's token-gated playlist, a powerful benefit for NFT project, Overlord founder states. So pretty much what is happening here is Spotify's trying to get into the whole Web3 NFT thing. I know a lot of people are probably sick of hearing about NFTs, and it comes down to because 90% of these NFTs are a scam, but when they're used right, they're actually pretty cool. One of the things I point to is like Sologenics OG NFTs. They'll usually have certain accesses to whatever event that they're holding. If you have the OG NFT, maybe you get in free or reduced price or something, some kind of benefit to actually holding these NFTs. So it seems like Spotify's jumping on this bandwagon. So it states, joining the pilot are a handful of NFT projects, including Overlord, Kingship, letting holders from each project test out a unique crypto integration with the streaming platform. Essentially, the feature lets members of those particular communities connect a crypto wallet holding one of the Ethereum NFTs to access a exclusive Spotify playlist. I like this idea. You could have your favorite artist release an NFT and their fans can go and collect the NFT that gives them exclusive content that they might have not ever gotten before without the NFT. So that kind of creates a even tighter niche community, and it's great for marketing, to be honest. So I'm all for it. Moving on, Coinbase was in the news a lot this week. So this one states Coinbase drops free Ethereum NFT via Zora to mark Base network launch. Base introduced as a free NFT that Coinbase made available through Zora, an NFT minting platform and startup focused on Web3 creator tools. It's an open edition NFT, which means that anyone can claim one of the identical collectibles until the minting window ends on Sunday, with a limit of one NFT per wallet. Already more than 24,000 of the Ethereum NFTs have been minted since this morning's announcement of Base. As a result, the NFT's smart contract, which contains the code that powers the project, has become the largest gas guzzler on the Ethereum network, with over 271,000 worth of gas or network transaction fees used over the past 3 hours. That is insane to me. I just don't understand why people keep minting NFTs on Ethereum when the gas fees are so high they could move to platforms like Sologenic or anything else that has cheaper NFTs. It seems to me like Ethereum is just a status symbol. Like, because the fees are so high, it's more exclusive, and not everyone can actually get an NFT on there because they don't want to pay these high fees. In the other Coinbase news, it looks like Coinbase is building its own layer 2 on Ethereum, and they're going to call that Base. Coinbase today has unveiled its own Ethereum layer 2 network. The company says Base will be the new home for Coinbase's on-chain products, and its hope an open ecosystem for millions of new decentralized apps. I'm actually kind of interested in this one, but I need a little bit more details on what they're providing right now. It says they're gonna be using this layer 2 for certain dApps, but I want to know what kind of dApps are they actually applying this to. I need a little bit more information before I would put my money there. So Coinbase Senior Director of Engineering Jesse Polak says, "This is a bet that we can help enable the next million dApps, which are going to bring in the next billion users. We think that's going to happen on a 5 to 10 year horizon, and this is our contribution on making that happen sooner rather than later. Our goal is to launch mainnet in the next few months." So I don't think I would buy into this initially anyway. Typically, you're gonna have a hype period when this token comes out, and it's most likely gonna crash. So I would wait for that crash period, sit back, kind of see what kind of dApps are being built. Is there actual utility here? Is this worth putting my money in? And then kind of go from there and see what happens. Sam Bankman-Fried is back in the news. Apparently, he is getting criminal charges for political donations that he actually made to people, which the whole thing actually takes me by surprise. It seems like our government is actually cracking down on this guy, where originally I thought nothing was going to happen. He would just run off with all our money, just like Alex Mashinsky at Celsius is just getting away with everything that he's done so far. But it looks like things are actually happening. So states prosecutors today hit disgraced crypto mogul Sam Bankman-Fried with new criminal charges relating to political donations he made while running the now collapsed digital asset exchange FTX. A superseding indictment Thursday alleges that the ex-FTX boss made more than 300 illegal political donations in the United States to try to purchase influence over cryptocurrency regulation in Washington, D.C. Thursday's new charge sheet alleges Sam Bankman-Fried was able to access and steal FTX customer deposits without detection. And it further goes on to state that some people that actually did take donations from Sam are returning those. In another article that I actually have here, some of the most known that were actually returning their funds were Beto O'Rourke and Senator Dick Durbin. So good on them for actually giving the money back. There was big news in the Polygon community. Apparently a block explorer crashed, but people were kind of thinking that the entire blockchain has went down. So it says reports were greatly exaggerated that Polygon had not experienced any outages in processing blocks, and a few nodes on the network did, though, go out of sync, according to a Polygon spokesman. So the Polygon spokesman actually did clarify. He says block production never stopped. However, there have been a degradation in the network performance temporarily. Those nodes have resynced and systems are back to normal. The broader panic appeared to stem instead from a still ongoing outage at Polygon Scan, an independent chain explorer that monitors and analyzes activity on Polygon. Polygon Scan has not updated new Polygon blocks or transactions for almost 2 hours at the time of writing this article. So you have several tweets going out. Why is no one talking about the fact that Polygon's last block was 2 hours ago? People posting the blocks actually here. Am I reading this wrong? Or was the last Polygon block 45 minutes ago? There's just a lot of panic that actually happened, but it turns out it was a nothing burger and people were just kind of blowing it out of proportion. It says many, particularly advocates of the rival network Solana, jumped on the story as evidence of system issues with Polygon's functionality and long-term prospects. So obviously your rival is going to go and make a bunch of FUD up about you. But in this case, it wasn't a lot of issues. When it comes to Solana, Solana's never even up. So let's be honest, they go down once a month. I don't think they have room to talk about any blockchain going down. Moving on from there, the Bank of International Settlements came out with a report that says if you bought Bitcoin after 2015, you've most likely lost money. A report from the Bank of International Settlements claims sophisticated Bitcoin investors have made money, but most retail buyers have lost out. It says Monday's Crypto Shocks and Retail Losses report looks at how retail investors flooded the space when the price of coins and tokens started plummeting, and most buying volume took place when Bitcoin was above 30K. At the moment, Bitcoin is trading for around 25K, down 64% from its all-time high. So pretty much it seems like what they were trying to do is just spread more FUD. They go on to say that these losses could be exasperated by the fact that larger, more sophisticated investors tend to sell their coins right before steep price declines, while smaller investors were still buying in. So really the whole point of this article is to watch out for whales. Obviously, a whale is going to be someone that has a lot more accumulation of a coin, and they can tank the market in a situation. So they're kind of controlling the price action. So they're just kind of saying, watch out for that. Try to do your best judgment on what you think actually is going to happen, and don't overinvest. And the last big piece of news that I had for this week states that new YouTube CEO is bullish on Web3 tech like NFTs and the metaverse. So how Susan stepped down as CEO, and this new guy, Neil Mohan, is actually being appointed to lead YouTube at this point. And this guy's supposedly pro NFT and pro crypto. So it's kind of interesting what he might implement into the new platform. So it says, during his long tenure shaping YouTube's offering, Mohan has kept an open mind about the evolution of the internet and its assorted platforms. Last year, he disclosed in a blog post that YouTube was looking at ways it could possibly integrate Web3 technology, whether by making YouTube more immersive, by leveraging the metaverse, or tapping technology like NFTs, unique digital tokens that are often used to assert ownership of online content. So personally, I'm not a immersive Web3 guy when it comes to YouTube. I think maybe that could be cool, I guess, for some people, but the idea of bringing NFTs that actually have utility, that could be something that could be cool. When you look at like the OG NFTs that I was talking about earlier, that really did kind of bring the sologenic community together in a way. So I think if you have a YouTuber who is popular and he creates his NFTs that are actually popular for whatever utility they provide, it kind of help him grow a community, or bring that community together to do certain things. So it could be interesting. It just really depends on what ideas these people have and how they're going to use this technology, and also doing it in a way that 99% of the scammers out there that are selling these NFTs can't come in and scam your audience, right? There needs to be some way to actually protect the people that are watching your videos. So those are the main things that happened this week. Hopefully you guys enjoyed that. Thank you to my Patreon supporter, Kevin, and thank you guys for watching.